So let's talk about our earnings on this side of the Atlantic. The quarterly earnings is here, and the banks are grabbing the front rows on Broad Street. Today, UBA PLC, operated in some 20 countries, including London, New York, and Paris, announced a headline profit of 44.5 billion naira, and as its operations across Africa continue to support the lenders' growth. Let's get out to the numbers and what's driving them as we bring on Vetiva Capital's banking research analyst. Is the head of the unit, Joshua Odebisi, here in our Lagos studios. Joshua, it's good to see you again.
Thanks.
The last time we were chatting to the full year earnings. Now you're back with the quarterly earnings. Let's start with UBA. Talk to me about the numbers. Earnings per share came in decently, or roughly 9%. Return on assets employed about 20%. Was that good? Is some good news there for UBA?
Yeah, absolutely. UBA did quite well. I mean, this is just following the trend. We've seen some really positive results. Earnings are up pretty much universally. Profits are up amongst all the banks except maybe you would say GT, but there's a bit of an explanation for that. But yeah, so far so good. Q1 is looking very good for the banks.
UBA in particular, where's the money coming from? Gross earnings, 183.9 billion. Is that consistent with its peers?
Well, as you mentioned, UBA is, a very international bank with a lot of operations, and quite a bit of their earnings and their profits comes from outside of Nigeria. So definitely it's not the same mix as the rest. A lot of it is also coming from non-interest revenue. So that's also playing into it, and we're expecting to see a lot more of that going forward.
You're going to read the tea leaves of a bit of more banks that are making some, but you just touched on GTCO. What's the issue around GTCO, by the way? Is it the move to holding structure?
Well, to be honest, I don't think that GTCO is actually as bad as it looks, simply because when you drill down into the numbers, you can see that their operating expenses grew quite significantly year on year. But there's a reason for that, and that's because GTCO like to take their AMCON charges quite early on. So they take the bulk of their AMCON charges between Q1 and Q2.
Okay.
And that is not something that all the other banks follow. So that is sort of obscuring the figures a little bit.
Yeah.
But by the time you adjust for, by the 9-month period when they've already taken all their AMCON charges, you'll probably start to see a lot more growth in their bottom line.
Impairments down nearly 40%.
Yes, again, like I said, the thing is,
35% year on year, yes.
The performance overall is still pretty impressive. They still grew, year on year. Gross earnings were up by, I think, 18%. So you can see that their loan book is solid. Their impairments are low, as they've always been, and they're keeping their heads above water. All that's just happening is that, like I said, the AMCON charges are obscuring the profits a bit.
Is it too early to begin to assess GTCO and maybe access core as well from a holding structure? Is it too early? Is it a bit too early?
I definitely think so. They've not had enough time under the new structure to, flesh out those businesses and allow them to really take off and fly. So it would definitely be towards the end of the year, or preferably even into next year, before we start to see any kind of benefits from the holdco structure.
One of the banks that sometimes you begin to try to separate the holdco structure from the bank itself is Stanbic IBTC. What numbers are we looking at right now for Stanbic? Gross earnings in at 47.7%. That's about 67.23. UBA was reporting triple digit of about 184 billion. That's quite a whole lot of difference.
Sure, but remember that Stanbic is, composed quite differently from UBA. But definitely their own numbers were also impressive. Their bottom line numbers year on year were, very, very high double digits. So I think that they're doing well. They're recovering a lot better, and we can hope that they'll probably be back on track, especially with their non-banking subsidiaries, because that their banking subsidiary is not that great.
Yes. You can compare it with UBA. But what everybody sees outside is Stanbic IBTC, but it's the holdco.
Sure, exactly. The bank itself, if you look at their assets, they're still a tier 2 bank completely, but the holding company with their asset management and their investment banking groups, those guys,
capital market services,
those guys are the ones that are really pulling in a huge chunk of the money.
Yeah. So okay, different fools for different folks. EcoBank Transnational, when I look at their books, am I seeing a wider picture across the 32, 35 African countries? I'm just looking at the Nigerian picture alone.
Well, you're definitely looking across the entire spectrum because the Nigerian business alone is not just what is driving their growth, but it is still
the group itself.
Pretty impressive growth overall. I think 26% growth year on year in their profits. So overall, they're doing well. They've had
earnings per share. Give me 112 cover. That's not so bad.
Sure, but for a bank that big in so many countries, more countries than UBA, I think that they should definitely be pulling a lot more weight. But I think that will only come with time.
Okay. So if I'm trying to look at Ecobank Transnational, where would I say the chunk of that business is not coming from Nigeria, by the way, even though we're the largest economy on the continent?
Well, they do group us, quite interestingly. So you do have the West African, you do have, the Francophone, Central African, and all those countries. So I don't think that it's just enough, or it's a bit reductive to just look at the Nigerian business, although, of course, the Nigerian business is a very important part of the overall business, but I think that it's still just the sum of the parts.
So, as an analyst, what are you looking for, basically, now, when you sit down, what does it reveal about the state of the Nigerian economy and how we're coming out of last year, 2021, the first quarter of the year, with the budget, with all that is going on with the whole crisis in Ukraine? How are the banks pulling through? How did you think they pulled through in Q1?
Well, from what has been revealed so far, the banks that have released, I can say that there's been an improvement, a bit of an uptick in yields because we've seen, quite strong improvements in volumes of trades in the fixed income market and in interest income. So I think that the banks are pulling a lot more in those two aspects specifically, and that's obviously a huge chunk of their revenue. And what that indicates economically is that the cost of borrowing is going up. It's not where it should be. I think that the natural price, the cost of borrowing should be a lot higher, but at least the yields are favoring the banks a bit more than they did throughout 2021.
What about the monetary policy environment? The central bank decided to leave interest rates unchanged at its first meeting of the year in March. So where does that leave the banks in terms of for the rest of the year? If, as an analyst, look, if I look at the books right now, where are they making money really? Is it still on the side of the government securities, trading, or they're really doing what people on the street will call they're doing the real banking? If you talk to managers, they say, well, they're not doing real banking.
Well, it's a bit of a mixed bag because if you say real banking is giving out loans, loan growth has not been particularly impressive so far. Yeah. So I can't say that it's to do with that. On the other hand, as I mentioned, obviously the cost of borrowing, i.e. the fixed income yields are a little bit more positive. So definitely there's a bit more play there. And if the volumes are favorable, that means that players, whether local or international, are coming into the market and trying to buy fixed income securities. That is going to filter into their revenue as well. So overall, the monetary policy environment, although the CBN kept rates stable, what's going on underneath the surface,
on the street itself,
yes, is still is quite different.
So what's your outlook from the other big boys on my street? The Access, the FBN Holdings, the Zenith, by the way.
Well, I mean, for Zenith, it goes without saying we expect some. I should
close my eyes and just put some figure there.
I mean, not really, but you can expect some growth from them and the rest of them as well. Access, like you mentioned. It's very likely that the trend that we've seen will filter through to all the rest, even some tier twos like your Fidelities, for example. I mean, FCMB, yes. They did quite well.
Yeah,
so
the numbers
I can
just
imagine
came through.
FCMB banks will do
was reporting well first quarter profit climbed 5.17%, and that's at the holdco level.
Right. And then so overall they're doing well, but Fidelity is the one to look out for, I think.
Yeah, well, that bank seems to be pushing itself.
Yeah, very aggressive.
Its way into the first year.
Well, I mean, there's a way to go, but
there's nothing wrong. There's nothing wrong with ambition, by the way.
Of course.
It's beginning to rain outside. You need to get on the road, get out of the studio, and get a bit more cozy. Thanks.